Hi everyone, welcome aboard to our YouTube channel, Fresher Platform Global, particularly BCom students, those who are pursuing and pass outs. And this is session 3 of Financial Accounting Expert Training. And this session deals with kinds or types of transactions. And the kinds or types of transactions are accounting transactions, non-accounting, inventory, non-inventory, internal and adjustment transactions. The first and last type of transactions are with reference to both manual and computerized accounting, and the middle four transactions are with reference to computerized accounting. The first transaction type is accounting transactions. By recording these transactions, they will affect the core financial statements. The transactions which are recorded in subsidiary books or books of accounts or subsidiary journals like purchase returns, sales returns, cash book, journal proper, bills payable, bills receivable. These are the 8 subsidiary books which generally the students know. And they are also recorded in the computer application also. In computer application, the purchase returns and sales returns are known as the debit note and credit note. So, by recording these transactions, they will affect the trading account or profit and loss account or the balance sheet. Somewhere, somehow, they will affect the financial statements or the core financial statements will be affected. This is something about the accounting transactions. And non-accounting transactions which don't affect the financial statements. It is very clear. They will not impact the financial statements. Like the examples are purchase order, sales order, request for quote and sales quote. Okay. If we are placing a purchase order to our supplier, then it will be a purchase order for us and it will be a sales order for them. So at both ends, it is a purchase order and it is a sales order. These are the two transactions. And the third one is request for quote. If we are requesting a quotation with our supplier, then it will be a request for quote for us, and a sales quote, it will be a sales quote for them. So at both ends, okay, these are the two ends from our perspective and from our supplier's perspective. But they do have a financial character because the purchase order will have the number of goods which we are ordering, and the quantity of the items will be there in our purchase order, and the amount of that particular purchase order will also be there. So all the four elements of the transactions are there. It is a business activity, uh, and the involvement of two parties for the exchange of goods and services and in monetary terms. These are the four elements which are available in this particular purchase order or sales order. But it will not affect the financial statements because it is just a purchase order. Okay, we did not receive the goods, we are just ordering it. The reason it will not affect the financial statements. And the third one is inventory transactions. They will impact the physical inventory and they will not affect the closing stock. Okay, the examples of these transactions are material receipt note, that is MRN, or the goods receipt note, that is GRN. MRN, some businesses will call it as MRN and some businesses will call it as GRN, MRN or GRN. And the delivery challan or delivery note. So these are the two transactions. By recording these two transactions, only the inventory will increase at our warehouse, but the closing stock will not be affected. Okay, so this is something about the inventory transactions. And the other examples like the debit note and credit note. In case of debit note, it is a purchase return. When we are returning the goods to our supplier, the inventory at our warehouse will increase and the closing stock also will increase or decrease, sorry. The inventory at our warehouse will decrease and the closing stock also will decrease in the balance sheet. And in case of credit note, the inventory at our warehouse will increase and the closing stock will also increase. This is something the effect of debit note and credit note. And the other activities are non inventory transactions. It is very clear and it is self-explanatory that they are non-inventory transactions. The inventory will not be affected. Okay, purchase order and sales order, request for quote and sales quote. These are the examples of non-inventory transactions. And the fifth one is internal transactions. Internal transactions are like the material request from the warehouse to the purchase department. Okay, and the material indent from the warehouse to the purchase department, or the material requisition from the warehouse to the purchase department, and the material issue or receipt, like material issue is from stores to the production floor, or the receipt by the production floor. So this is something material issue and receipt, and the material transfers from one warehouse to other warehouse. These are the internal transactions. By recording these transactions, the other party or the other business is not involved. Okay, the reason they are internal transactions. And the adjustment transactions, everyone know that the by recording the adjustment transactions, or by the adjustments, the profit and loss account will be affected and the balance sheet will be affected. It do have a dual impact. Every student know the adjustment transactions. So this was something about the kinds or types of transactions, and thank you so much for watching our session, guys, and requesting you to like, share and subscribe our channel with near and dears. And our next session deals with the occurrence or phases of transactions, and accounting life cycle, and the transaction flow. These three things will be discussed in our next session. Have a wonderful day, guys.